Whether it's on the football field, the basketball court, or the ski slope, since the early 2000s, elite athletes like Steph Curry, Tom Brady, and Lindsey Vonn have sported the same brand in preparation for game day, Under Armour. The company says its state-of-the-art products have been engineered to help athletes solve problems and up their game.
If it's Under Armour, then what's it do? So like that idea of innovation, everything we do, that's what the DNA of the brand. That's what the consumer knows when they buy Under Armour, that it's something that's actually making them better. So that's what and who we are. That's what drives through.
With a roster of sports celebrities, in less than 2 decades, Under Armour grew to become one of the biggest sports apparel brands in the world, alongside Nike and Adidas. But the company that urged athletes to fight on together has fallen on tough times. As of 2020, sales growth at Under Armour has slowed on its home turf of North America, and its stock has fallen from its all-time highs. The coronavirus pandemic has only added to the company's woes. In October 2020, the company announced third quarter revenue was flat, and overall 2020 revenue is expected to decline compared to 2019 results. One bright spot, footwear revenue in the third quarter of 2020 increased 19% from the year prior. But with COVID-19 wary consumers spending more time at home, ditching work clothes and suits for yoga pants and sweats, analysts say the latest athleisure boom and a newfound interest in health and wellness could propel Under Armour and its rivals for years to come.
What we're going to see in the post-COVID world is people wearing their athleisure and their comfortable dress, whatever they deem that to be, everywhere.
The beauty of the space with athleisure is there's not a lot of competitors. It's a growing category, and it shows no signs of stopping.
So the question is, can Under Armour rebuild its momentum and catch the athleisure wave before it's too late? Or will rivals Lululemon, Nike, and Adidas take over? Under Armour got its start in Washington, D.C. in 1996. Former University of Maryland football player Kevin Plank wanted a solution to the sweat that built up in his cotton t-shirts during practice. In his grandmother's basement, using a stretchy synthetic material, Plank's fledgling company engineered a shirt to wick away sweat from the body, keeping athletes cool, dry, and light.
I would say this, Under Armour was a very important brand for paving the way for a huge change in how we dress, for playing sports, and for how we're working out. If you go back before to the IPO, and you go back to the 90s and the 80s, effectively what people were doing to work out in, they were working out in a cotton t-shirt, which absorbs sweat. And if it absorbs sweat, it becomes heavy. And if it becomes heavy, it impacts negatively your performance, either in the gym or especially on the field.
The company got its big break in 1999 when it was signed on to supply athletic apparel in Oliver Stone's Gridiron film Any Given Sunday. The company only made about $40,000, but athletes everywhere took notice. Within 5 years, Under Armour had revenue of $5 million. Under Armour went public in 2005 at $13 a share, and by September 2015, shares had risen to a peak closing price of $53. And it was rolling out new products beyond t-shirts as well, including a line of heat gear apparel designed to be worn in hot temperatures and cold gear products engineered to maintain a body's core temperature.
I'd say in the year about 2006 or so, Under Armour went public. That gave renewed force to the athletic apparel craze, if you will, followed thereafter by Lululemon. And ever since, we've seen the demand for suits go down, the rise for casual wear go up.
In 2006, Under Armour went head-to-head with sneaker giant Nike, jumping into the footwear space. But instead of moving directly into the competitive gym shoe market, the company launched a line of football cleats, capturing 23% share of the market in the first year and becoming the official footwear supplier of the NFL.
When they came out with cleats back, I think it was in 2006, they came out with that great ad with the click-clack. And if you were a football player, you said, oh, that's cool. That's what it sounds like when I go on the field. Oh, they really understand what it's like to play. I'm going to go try their cleats.
In 2009, the brand launched a line of running shoes as well as soccer cleats. By 2010, overall revenue soared to $1 billion. And in addition to selling products, the company also made a big push into acquiring athletes' training data. In 2013, Under Armour acquired MapMyFitness for $150 million, and 2 years later purchased fitness tracking apps MyFitnessPal and Endomondo for a combined $560 million. At the time, the company was signing contracts with some of the biggest names in sports, including New England Patriots quarterback Tom Brady and Golden State Warriors Steph Curry. In 2016, Under Armour and UCLA announced the biggest college sponsorship deal ever, a 15-year, $280 million contract for footwear and apparel. Though it's worth noting that amid falling sales, Under Armour announced in the summer of 2020 that it wanted to end the deal just a few years into the 15-year agreement. By 2015, the company had a peak market cap of $22 billion. But even as its share price peaked, in the mid-2010s, the company was starting to lose its luster and net profit was taking a hit. Critics said the brand was losing its unique appeal.
One of the big problems with the Under Armour garments is that they're visually very specific. And you instantly associate them with exercise. And that doesn't really engender itself to a versatility that American consumers want. So that's probably the design issue is the number one problem.
The downturn in retail also weighed on the brand. In March 2016, big box retailer Sports Authority filed for Chapter 11 bankruptcy. Under Armour reported net income in the second quarter of 2016 of $6.3 million, 57% lower than a year earlier. According to a Q2 2016 earnings call, the decline was likely caused by Sports Authority's bankruptcy filing. And the company was struggling with sales more broadly on its home turf too. North American revenue in 2019 was $3.6 billion, down 2% from 2018. And keep in mind, sales in North America are a huge part of how Under Armour makes money. In 2019, 69% of the company's overall revenue came from North America. On June 1st, 2020, Under Armour's Chief Operating Officer, Patrick Frisk, replaced Kevin Plank as CEO. Plank moved to the company's executive chairman and chief of brand slot and remained involved in the larger direction of the company. But the coronavirus pandemic may have impacted the company even further. In May 2020, Under Armour said it was delaying payments to some of its athletes as a cost-cutting measure after first quarter sales plummeted 23% due to the coronavirus pandemic. And in September 2020, Under Armour announced it would lay off about 600 employees globally. And the following month, the company agreed to sell MyFitnessPal to a private equity firm. Athleisure, the fashion trend known for sporty gym clothes worn around the home office or at the grocery store, is a roughly $80 billion business in the U.S.
Looking into the future, you're going to see a lot of athletic wear, a lot of athleisure, a lot of synthetic fibers. Sorry, cotton industry, but that's the truth. And this is the future of American fashion. And people need to get on board or, remember the good times they had in the early 2000s.
The category is dominated by a few big players, including Nike, Adidas, Lululemon, and of course, Under Armour. According to analysts, brands offering products with a healthy dose of performance and fashion are well positioned in the athleisure market for future growth.
I'd say it's two things actually. It's the words function and fashion. Brands start off doing very well if they show that they have functional prowess or they're much better than other items of that same category. We saw it with Nike and footwear. We saw it with running footwear back in the day. We saw it with Lululemon with their yoga pants. We saw it with Under Armour with their compression shirt. So it's about function first. That gets you started with a great brand. However, fashion is also what matters. And frankly, that's something that Under Armour has had trouble with in the past, is that fashion quotient, something that Nike, Lululemon, and Adidas have gotten right, function plus fashion.
Lululemon, known for its trendy yoga pants and pricey leggings, said despite store closures due to the coronavirus pandemic, revenue in the second quarter fiscal year 2020 increased 2% from a year earlier. As consumers shifted from office wear to comfier clothes, the stock closed at an all-time high of $398 on September 2nd, 2020, more than double than what it was a year earlier. And to capitalize on the country's newfound home fitness craze, the retailer announced in June 2020 plans to purchase at-home workout company Mirror for $500 million. Mirror sells a $1,500 high-tech mirror that streams live workout classes. And while legacy athletic apparel companies like Nike and Adidas have been hit hard by COVID-19, these two brands have seen a big spike in the sale of apparel in the years leading up to 2019. And even with the pandemic as a backdrop, Nike stock is still on a tear. One of the strongest global brands in retail, the company saw its stock close at an all-time high of $130 in October 2020. Sales of apparel for Nike brand clothing were $11 billion for the fiscal year ended May 31st, 2020, almost 27% more than in 2015. Part of the reason? Teens love Nike clothes. A 2019 study found Nike to be not only teens' favorite athletic apparel brand in the US, but also the group's favorite apparel brand in general, ahead of both Adidas and Lululemon. And the company sees a big opportunity in women's clothing as well. As of 2019, Nike's women's line represented less than 25% of Nike's total sales. But with women flocking to comfier clothes and accessories, the company thinks it can grab a larger share of the market.
Well, as long as there's been athletic wear, there's been this weird and sort of hard to define line between what you're wearing on the court and what you're wearing to look like you're somebody who likes to go onto the court. Nike was able to successfully do it because a lot of times they invoked and brought on board really creative people who understood the market, who understood what it was that the next generation wanted.
It's a similar story for Adidas. The German-based company had apparel net sales of around $10.5 billion in 2019, 28% more than 2015.
Well, Adidas is a really interesting company because they have always been very on the forefront of pushing design elements, right? They are cool. They're a cool brand. And, that takes us back into the late 70s and 80s when you have bands such as Run DMC taking this garment. And when you get somebody as powerful as Run DMC singing a song about your clothes, like, you're on the path.
But while Nike, Adidas, and Lululemon are embracing the fashion leisure trend, Under Armour said the company's focus would remain firmly on athletic performance.
Listen, we've heard all the reads on athleisure, what it means. Are you in it or not? Let's be crystal clear. We've identified our consumer as something we call the focused performer, and that is a mindset that the consumer has. And it means that when they're thinking about what they wear and what they do with Under Armour, is that there's no here's performance and then here's athleisure. It is all performance. We say that without beauty, there is no performance.
As of September 2020, Under Armour reported a net loss for 9 out of the last 15 quarters. While Under Armour's hesitancy to fully embrace athleisure may have hurt the brand's sales, recent controversies may have done even more to damage the company's image long term. In 2017, the company came under fire from sponsored stars after Plank referred to President Donald Trump as a real asset for the country.
I think he's highly passionate. He definitely, to have such a pro-business president is something that's a real asset for this country. I think people should really grab that opportunity. He loves to build. I don't think there's any surprises here, when you look at the president. So he wants to build things, and he wants to make bold decisions, and he wants to be decisive. And I'm a big fan of people that operate in the world of publish and iterate, versus, think. So there's a lot that I respect there.
Following the interview, ballet dancer Misty Copeland wrote on Instagram that she strongly disagreed with the comments. Steph Curry, the face of Under Armour basketball, went on to criticize Trump even more harshly. And there were other troubling news reports too. In November 2018, the Wall Street Journal reported that Under Armour executives and employees, including Plank, went with athletes or co-workers to strip clubs on company-paid visits. The company told CNBC at the time of the report that it would continue to address inappropriate behavior as it strives to create a respectful and inclusive workplace. The sportswear maker is under investigation by federal authorities too over its accounting practices. Under Armour said it was cooperating with federal investigators and believes its accounting practices were appropriate. The company was also sued by UCLA in August 2020 for breach of contract after the apparel company announced it was ending its deal with the university. CNBC reached out to Under Armour, but it declined our request for an interview. In January 2015, Under Armour unveiled the Curry 1, the first signature shoe from NBA star Steph Curry. The shoe was loaded with tech, including a new cushioning system that absorbed impact and converted it into a responsive burst. After the launch, Under Armour's first quarter 2015 footwear net revenue shot up 41% to $161 million from the previous year, and by June, Curry's Warriors were NBA champions.
They also did a good job, at least early on, with their Steph Curry product line. It was the #1 basketball shoe for a year, the Curry 1.
By 2019, footwear made up 21% of net revenue at Under Armour, along with apparel at 66% and sales of accessories including performance gloves, bags, and headwear at 8%. But like its apparel line, Under Armour's footwear just might not be resonating with consumers the way it used to. In 2019, Under Armour's footwear sales were $1 billion, only 2% higher than 2018. The problem, according to analysts, Under Armour's shoes just weren't hip, and the company's focus on performance was hurting the brand.
Under Armour has been hard, is really doubling and tripling down, in my view, on performance consumer. And as I said, if you ever go out and watch the New York Marathon, which I hope we'll get to do this year or maybe next, there are 50,000 runners running, and there's about 5 million people lining the streets of New York cheering. And, it feels like Under Armour has been solely focused on those 50,000 runners and not on those 5 million spectators. And, you get a very narrow market when you solely focus on performance.
The problem with the footwear side of things at Under Armour reflects the problems or mirrors the problems that the company's seen in the apparel side. And that's the fashion quotient of their footwear. If you think about their function, it's great of their footwear. The fashion is not. So again, that's what's held back the footwear business in terms of growing, the volume in as strong as the growth rates you've seen out of competitors like Nike and Adidas.
And like Nike and Adidas, the brand is also facing pressure from fashion-forward companies like Puma and Fila, who raise their profiles, making sneakers that are stylish but not necessarily designed for the gym. In April 2020, Lululemon said it's planning to get into the footwear business in a bigger way. The company said it would start making its own footwear after seeing the success of its collaboration with Los Angeles-based sneaker company Athletic Propulsion Labs. In August 2017, Lululemon started selling APL sneakers, which cost upwards of $200 a pair in some stores in the US. Despite these issues, analysts say with the country's newfound interest in health and wellness, and with more people working out, the coronavirus, an unlikely accomplice, might just be the solution to the company's problems.
The good news is that if you think about the category of health and wellness, fitness, clearly people are afraid of the COVID virus. And one thing we know about the virus is that to prevent pre-existing conditions, you want to be a healthier person. So people are working out more. And if people are working out more, it means that they're likely to go back more towards a performance aesthetic with the clothing of athletic apparel. And that's something that could help Under Armour going forward, since they're sticking with their athletic or performance aesthetic with their clothing.